Market recap for Tuesday, the 9th of December, and Wednesday, the 10th of December, FOMC. Like I said on Monday, once Monday made the relative equal highs, I said it's going to be most likely that we are going to go get them for Wednesday on FOMC, which made me. Did I take a trade on? I'm pretty sure I took a quick trade on Monday, quick shorts, and then which made me very uninterested in Tuesday. And because I know it's just going to be. So you see when ICT says don't trade the day before FOMC or like some NFB news or stuff like that is because this what could happen, right? This type of consolidation because the whole purpose of the day is genuinely just engineering liquidity or to get the bias wrong. So when FOMC happen, price goes in a certain direction. If that makes any sense. So if we're gonna leave these for Wednesday, what do you think Tuesday will do? It will go get the low, right? And then go get the high. So it's basically like just ping ponging of liquidity, right? So here at this is Monday's low, right? So as you can see at 9:30 we come take Monday's low, right? So let's just drop. Let's put a line here. Drop down to the lower time chart. It's a day that I haven't traded, but I can show how you trade it. Cause I wasn't interested in it really. I'm pretty sure it's easy to trade, but I'm guessing maybe high resistance liquidity running that day or something like that. So let's just check it real quick. Yep, just look at this garbage. Okay? Like, yes, you know what to do, you know what to trade, you know how it is, but how can you frame risk to be tight? If I can't frame my risk to be like so tight, then I don't want it, right? I don't care about the trade. There's always another day. I can see relative equal highs. These are Asia. This is London. So honestly, I'd just target London, right? As a buy side. Um, I'm guessing this was pre 9, like on 9:30. This would have happened after 9:30, right? So we take the initial liquidity. Yep, right there. We change the market structure. Is that the first presented? Yep, that's the first presented. Honestly, um, take a first presented from here to here. Just check it out. First, we want to close above, right? Right here, we do close above, but not fully above the, what do you call it? But this one's good enough for me because then I would be checking the 15-second. Either I'd buy on that, or once we close above and then come back to it, then I would buy. If I'm aggressive, then I'll buy this breaker block, right? So I'd put my stop loss all the way down. Like, let's say I buy here, and I'll put my stop loss all the way down here, allowing for this, right? But realistically, what should have happened is we should have went down on this wick and went up, right? And then offer this, then offer the breaker, and then keep going higher. But as you can see, watch this price action. Yes, it went up to the target, but it went up at 11:16. I'm not waiting in my trade for 2 hours, okay? That's way too much for me anyway. Like that, I can't be asked. Like most of my trades are genuinely 5 to 10 minutes, right? And it's just straight to TP. Anything that's high resistance liquidity run, I'm not interested because I know myself. I'm gonna keep looking at it, and it's like, oh, if this goes down a bit, then I might just trade that. You know what I'm saying? I don't want to allow that in my trades. So, and let's say I even traded today, then I might have went gone, and then I would have hit break even, or then that would have made me maybe change to like shorts, then buy. You know what I'm saying? This is exactly the days to avoid because if I know some stuff I can't be about my psychology as of now, why not just avoid it, right? And that's what made me consistent, I guess, right? Mainly avoiding that. And we can see we can get that high at 11:34. That's 2 hours. That's way too long just for such a small target. I mean, how much? Let's say we get the breaker entry. Yeah, 2 hours for 106 handles. I can't be asked. And I can't frame like tight risk, and I can't move my stop loss to break even. Just can't be asked, right? So, anyway, that brings us to the next day. Well, let's quickly recap for, I guess, um, Tuesday, because we don't even have to use the daily time frame to check that. We just need to see what liquidity is there and just go for it. Just treat it as seek and destroy, right? Or high resistance like that, right? It's gonna be either or, okay? And we'll have Wednesday, which I didn't look at the AM session and I'm not interested in, right? I'm looking for FOMC, so I'm looking past two, right? So the first thing that I want to know is the first presented fair value gap, right? For the, and I can't lie, I came into the chart like 2:35, right? I was kind of late. I was cutting it close, but that's when you should trade FOMC anyway, because it's two stage. The first one tells you what's going on, and the second one confirms it, and then you need to just jump on after that. So if we see 9:30, I'm pretty sure that's the first presented fair value gap right there, okay? And then I can't lie, I didn't use the PM first presented, but let's just use that as well. So right there, because I think on a day like, I never use PM first presented fair value gap, but I think on a day like this you should. 131 right there. Boom. You see that? Overlaps. Pretty nice. Explains that low. So I didn't use that, but I kinda seen it. I never used PM, but like I might use PM first presented for like PM sessions like this, right? Because I never trade at this time unless it's FOMC. Okay, for this day you need to use the daily, and why? Because we need to see what liquidity we have. What is the liquidity, right? At this current time, I'll open the 15-minute. The most obvious engineered one is these highs, right? Like they made it on Monday on purpose. Second is these lows, right? And I'm like, we could go for either, okay? So think about it. FOMC could have done this, right? If we're really volatile like that, we could have opened FOMC by going up. Wait, let me zoom in, okay? Right, so this is FOMC candle, right, at 2. It goes up here, and then from there we start shooting all the way down to that liquidity somewhere here, okay? And then what would we do is by 2:30 would start buying back up, but that's too much range. I felt for myself for this day, because it already like was taking too much time stalling on FOMC, so I feel like that's too much. So what's the closest one, and which one makes more sense to me is the highs, right? Because we engineered highs again, right? Look, right there. However, once 2:30 happened, and let me explain how FOMC works. Just by one more thing that helped us is look at this 4 hour, right? Look at 11. That's what gave me the hint that it's gonna be more time buy side, like I explained on Monday, because on the daily I couldn't find anything. However, on the 4 hour, just for that region, we have the BISI, SIBI, that was holding price, or push price down before, as you can see. So, and it's in like the market maker buy model basically for this. Right, once we had the original consolidation, this was holding price. So I carried it out through price, right? Because that's the only thing that I could use from there. As you can see, I just don't want any closures below the midpoint. And you'll see that we were using it throughout the week, right? If, come on, let me go like 5 minutes or 15. Like, we were using this, right? Like, so I know it's good to especially under that liquidity. That's my first PD array that I can identify that makes sense. And I just want us to respect the upper half of it, right? That's all I want. If we do that or go to any price point to the tick, then that means we're very bullish. And us going up and not even reaching like the upper quadrant is very, very bullish, right? As you can see, I put sell side liquidity, and that's just me I'm rushing, right? And that's not really sell side liquidity for this purpose, right? It is sell side liquidity. It's not sell side liquidity that I should be looking at, right? Why? Because two things. This sell side liquidity to me is not active yet. That's one. And second, um, on MNQ, the wick has actually was able to do the damage, right, at that specific time. So if we look at here, look at the wick. We did the damage. We took the sell side with the wick. However, NQ wasn't able to do it, right? And that explains the delivery that I expected for it to come down to do something, right? It needs to take some sort of liquidity if it wants to even go higher, right? Making a fake run, right? So this is genuinely from experience, right? This is genuinely just from experience. From why would I not buy this once we go and take this liquidity, right? This whole swing. Here is two, like we're about to have the second stage. We hit the breaker, right? Imagine this is lower low because we do actually take it and all of that. First thing is, if we're gonna come back down this low, I'm expecting us to hit the first presented fair value gap, right? Regardless of what structure this is saying, I'm expecting us here to hit a good PD array. And to me, the only thing that was there was the first presented fair value gap. I didn't look at the PM one, but it's there as well. Second, FOMC depending on the day, but most times you should trade really around 239 to 240, right? That's when you should start looking. So the setup being this early, right, for us to go there, to me that seemed too early. So I let this whole run go, and it went all the way to the relative engineered buy side, right? So could I have taken that? Yes. But was it risky? Yes, because then we could have went lower if we wanted to, and then went higher. So why would I literally said, if it's gonna go all the way up there and not offer anything, that's it. I don't care. I'm shutting my laptop down and I missed it. But I just know it's not worth it to chase it. Let it come to me, okay? And then boom, as you can see, everybody that's expecting these highs right here on this retracement got absolutely destroyed because all their stop loss would have moved here, which makes this real sell side liquidity. People would have pushed their stop loss from here anyway, because imagine this is not sell side liquidity. This now is sell side liquidity, right? Should have this deleted. I don't know why I still have it in the chart. Anyway, boom, we hit PM first presented, and we hit the first presented right there, CE, and that's a reaction. At that time, I didn't have that information. I was rushing. I was just putting stuff on the chart. But I was eyeing the wick. I was like, okay, that's a good reaction, and I'm expecting price to go from there. I just don't want us to lose the midpoint. As you can see, we go to the midpoint of the wick, and boom, we go up again, right? So let me just explain how I entered to make 100% sure the entry is correct, right? The entry is worth entering, because I can still, yes, MNQ and all that, but it could want to come down, like it's not 100% because remember there's relative equal lows below there. So like I can't be like 100% sure to just buy up this CE, right? It's just, again, probabilities. I want it to be basically almost at 100% I'm going to win the trade. You can't have 100, but like to me, I want it to be dead obvious, right? So once we go up, remember, to that fair value gap, I'm expecting price to, I don't expect it to just close it, right? Because it doesn't, it's not the same order flow, right? It has to come down. Once it comes down and goes to the CE, which means this is a failure swing, right? To take this lower and goes up. There is no reason for it to go up here, and all I want was just a closure. But look what we do. Boom, this place. Do I buy and chase? No. I put my order right at the 15-second gap, which eventually becomes a 1-minute gap, right? And that's it. Stop loss here. Look how low the risk is. I do not want even the midpoint to be traded to. However, I'll allow it. And as you can see, upper quadrant, right? Upper quadrant is where we were at. And that's it. How bullish is that? Yes, he was accumulating. Yes, it was bugging me out. But the risk is so low And if I'm wrong, I'm wrong, and that's it. Then that means there's no trade, because I wouldn't even go short, because there's no point now. Look at the time, 247, right? 245. There's no point. We're running out of juice, right? But I'm waiting for the 250 macro, and look at the 250 macro, goes down one more time to the top of the fair value gap, and boom, it's gone. Right? It's gone all the way what to the liquidity that I was talking about on Monday. So missing out on Tuesday, which would have been almost certainly a break-even day, even though we are lower prices, an entry here, an exit for 169 handles or whatever it was. Isn't that more than enough, right? Like, I'm chilling. I didn't even look at the chart this week. I'm traveling. I'm opening my laptop half an hour here and there, right? Just looking at stuff, acting like I'm working, which there's nothing to do, right? Like, I know what I'm looking for, I know what I'm doing. There's nothing to do, right? Like, and like on Monday when I looked at it and I was like, alright, on Wednesday we're gonna go to this TP, and then we do it, and then I actually trade it, and I get on it, and I risk manage properly, and I basically go break even the second that price went up here, right? In like, as you can see, in 5 minutes I'm break even, and I'm comfortably break even, right? Comfortably break even. That's what I noticed. My trades have been gone from like, yo, I'm losing, I'm either making this or losing that, to me either having a break even day or winning, right? Or very rarely now, I'd lose, right? And I wouldn't even lose much. Like, I'm actually content to stick into my max loss limit that I set for myself, because I don't need to make the money, basically, right? I don't care. I'm just doing it for the love of the game at this point. And this way, I've made much more because I'm not losing it, right? I'm either just winning it or protecting it. Like, so I'm making way more by just doing it this way. Like, this week I've only traded, or there's an account that I've only traded here, like for these last 2 weeks I've only traded once, I think, or something like that. And like, the combines, even though when I used to spam the combines every day regardless of how sure I was, now it's just like I'm doing them on the days that I'm just like sure about. I think I might have like 3 trades throughout the last 2 weeks, and I made more than what I made last month. You see what I'm saying? It's just being content, really, with like, I'm just waiting for the most perfect opportunity. Like, it doesn't have to be the most perfect, but like, once it comes, put the risk. And if you lose, yo, I did my best, right? Like, I waited, doing everything that was aligning, blah blah blah. Like, genuinely, if I lost this, because look at this, look how many confirmations I was waiting for, right? The fake, right? I didn't jump on the fake move because I just know it's fake, right? Now the real move, and I can see that it's a sweep, right? And then it goes up, right? I could have been buying any of this, but I didn't. I still wait another confirmation, wait for the midpoint. Okay, nice. Now wait for the change in state of delivery. Done. Now wait for some displacement, or wait for something to confirm that this is just not taking this and coming back down. Boom, done. And then enter and have a small stop loss. Manage risk properly. Boom. At that point, at this time, in my head, I can only see one way for price to go: higher, right? Higher. Then, anytime on here, it could have went higher or lower, but at this point, it told me I'm going higher, I'm going higher, I'm going higher, I'm going higher. It keeps disrespecting anything to move lower, and at this time, it's almost certain that it's gonna go to that high, and unless something happens, right, or some BS. And if then happens, or if I'm that confident I read it wrong and it goes to my stop loss, boo hoo. So what? Right? I did the best I could do. I waited, I followed my rules, and if I take a loss, it's whatever, because at the end of the day, it's still a W, right? It's still a W in my book because I followed everything that I need to follow. And yeah, I guess that's what it is really. Um, for the market recap or even this little yap session, be patient, right? Wait. Fill your time with other stuff that you don't need to check the charts so much, that you don't need to have a trade every day. That it becomes just like the side thing, right? It's not the main thing. You're just doing it on the side, right? Like you open your phone, you open your laptop, you open whatever, right? And then you just check, should I trade today or not? That's what I'm looking at for today as well, right now. I'm seeing, should I trade today or not? Because what, 170 points, that's enough for the week, I guess. But like if something's obvious staring me in, like telling me to trade today, I could, right? One thing here I'm seeing, like I would have loved an expansion back up higher, right? Because remember, this is what the second part of the FOMC should have done, right? You see that, like, because I told you about them relative equal lows, right? I'm guessing it's here. Look how we take them and then go back up, right? And I was looking at price at London. I think it was like 310 or something, yeah. And I was like, yeah, this is gonna go up either to OTE, or it's gonna go up and come back resuming for the high highs, and then this eventually will be the second stage redistribution of the big market maker sell model. So right now we can just check if we hit OTE. Okay. So first let's clean up the chart, right? Now we yapped about everything. We said this and that, right? It's obvious what I'm looking for, what I'm not looking for, why I'm looking for it, and why I'm not looking for it. And honestly, I love news because 9 times out of 10, let's say, I'd get the news right, like the news day, as in like a big news, CPI, FOMC, blah blah blah, right? I get them right. So when I see that day, it's technically the only day that I should trade for the week because it's the most volatile, right? It's obvious where they could take price to and where they can't take it to, stuff like that, okay? So now that we have this clean chart and now that we know, one thing is though, it's double relative equal highs. So let me mark the actual higher high and see where that is at, and if we took it. We should have taken it, but let's see how we took it and if we're gonna come back, right? So we've taken it by a wick, which is unfinished business. We're gonna come back, okay? We're gonna come back. So now we know that we're gonna come back. That is the draw on liquidity, and that doesn't have to be for this week, by the way, but or this day, and it can be. That's the thing. It can be. You see what I'm saying? I'm not saying it's certain. It can be. Why? Because I need to wait for more information. Because we could keep this high of this week to target for next week. Okay. So how do we check that? Well, we need to rule some stuff out. Is this run to go up higher to take it, or are we going to OTE? And where does OTE line up? And how? Well, for the love of the game, can we just get this high? Oh my god. One sec. I hate working on a laptop, man. It's actually annoying. Alright. So, that's the high. That's the low. Right? Let's, for example, check. Let's just do normal. Let's put. There's OTE. So, let's put OTE in there. And then I'm looking at mainly, no, 7.5 and the midpoint of it, really and truly. This is what I'm interested at. You can see we hit 6.2. However, as you can see, that 7.9 lines exactly with the new daily opening gap low, right? 7.5 is here, and there's a gap on the weekly open, our new weekly opening gap, right? So there is a chance, right? There is a chance, so I'm gonna say that we could go up to go down, or it depends on how we trade here, right? So let's say we're gonna go lower. Where would we go even? Right? Because then we'll also need to find what this low is, because this is what the low that I wanted on this day to be, so we could go higher, but we didn't do it, so I was very sus. However, now we did it. Now we cleaned it up. Why? Like, think about this. Even though the relative equal lows here don't really matter that much. Why? Because why would we need to go lower again? Okay, we already done the damage, right? We have already taken buy side, we've taken sell side. However, then again, it's still a 50-50 because we taken previous daily low. Are we going to take previous daily low, then take previous daily high, then expand higher? Do you see what I'm saying? There's a lot of I don't knows, okay? But then now we just need to limit it to current day liquidity, right? We know that we have London liquidity, right? As in relative equal lows. Actually, is it? No, you see, London takes that liquidity. That's actually very important. Even though it's relative with this, that is important. Second thing, we need to check our daily, right? I've extended this from just a market recap to just doing a whole analysis for this day, right? We need to check two things. First is this sell side imbalance, buy side inefficiency, right? And let's just do the quadrants and let's just make it actual lines here. Alright, midpoint. Okay. Second thing is the buy side imbalance, sell side inefficiency, right there. Okay. Yes, they're stacking, but doesn't matter which one is which, right? So now that low, as you can see, is not random. Okay. And look where the bodies are closing. Okay. I seen this at London without drawing it. Like, I can tell it was midpoint. So that's why I was considering buying in London and just let it go up all day. But again, I don't know where to frame my risk. I also don't trade London, so I don't care. Like, I know what it's gonna do, but don't care, right? So now that we went above, so we need to see the price swings. Have we gone to discount? Nope. Nope. No. We have not gone to discount. So for now, I'm gonna calculate this whole range, and I'm gonna be interested in buying once we reach discount. It's genuinely as simple as that. Like, if these lows are not in question later, right? Because look, at the time is 818 or whatever, right? And we only went to the lower OTE, which can do a retracement, right? We still haven't gone up there. I'm interested in this as for now as discount, right? So let's just have a quick look at the 15 minutes. As you can see, that is roughly where that order block is. Also, this is a breakaway gap, and this is the nice fair value gap, right? So what could price do? Price could go up and then go down and close somewhere here, or if it wants to go higher for the day, right, and go all the way up there, it really needs to shift all the way lower, right? So there's two things that are mainly gonna be done for today. Is the price is going up, right, up 930 something, all the way till 930, and then we're just gonna sell off to discount and just consolidate for the day and just do whatever, and that'll be a new low, and then that will allow us for tomorrow to go up higher, or we could go down. We need to start this early. By the time we're 9:30, we should be around here, come down, and then start shooting up the whole day. See how many, like, all, like, it could do a lot of certain stuff, but all I need to know is this high or whatever higher high it goes to, we need to go to discount before I consider buying. And if I feel like it's too expensive that I can just short, and the short makes more sense, because look, we're generating relative equal lows while we go up. So if we keep doing this, that means 930 will just shoot us down, and I'll just take probably something to near discount, the lows that are near discount, right? And I'm guessing the high will be like here. Yeah, so somewhere around that is where the high will probably be at. Okay, something like that. Maybe, I don't know. I'm guessing the high will be somewhere around here. Right, this also fits into this little small gap, right? That I could fill, take these relative equal highs, and then start shooting down. That's probably a trade that I might take, right? If I don't go outside or something, if I don't do anything for the day, then I'll probably trade it. It's probably in an hour. But yeah, that's enough yapping for the market recap or whatever for this day. Um, yeah, if the day becomes obvious, it looks like a low resistance liquidity run, and I've not checked news actually. So let me just open Forex Factory. Where's my phone? Forex Factory. And also, it depends on what the time the news is. 4:30 was 4:30. That's not UK then. Oh, we have the news in 7 minutes, 8:30. So if that news starts pushing us down, and then 9:30, like I said, then we already around here, we're taking them lows. Then we're gonna use 9:30 to push higher. If that news pushes us up and whatever, right, we're gonna use 9:30 to push down. And then after that, I do not care what happens for the day. I just care about that fast run, right? I'm in the trade for 5-10 minutes, like I said, or like some other days like this. It's just whatever, right? Anyway, that's the market recap. Plus the app, plus whatever. Yeah. Just make sure everything is lined up properly on the chart before I get it out, so I don't get cooked later. Right? Yeah, that's the market recap. That's whatever happened for the day. That's what to do with FOMC. Just remember to wait for 240 really before trading. That's my way of doing it. And yeah, peace out.